Today on the show, Tanzania second quarter GDP growth rises to 7.2%. Somalia says Shell and Exxon agreed to pay $1.7 million for oil blocks lease. Congo's $14 billion dam project threatened by disagreements. Thank you for joining us and welcome to Business Incorporated. I'm Chimezi Obi Iwa. We kick off with the markets here in Africa, where major indices were in the green. The Nigerian Stock Exchange bounced back from last week's downturn to trade positive at intraday, up 0.14%. In South Africa, the index also jumped 1.30% at intraday. And in Egypt, the stock exchange traded higher at 0.66%, while the Kenyan index closed positive at 0.15% on Friday. In the meantime, in the Middle East, markets traded in the reverse as markets were in the red at intraday. The Abu Dhabi and Dubai indices were down 0.27% and 0.28% each. The Qatari and Saudi stock exchanges were also down 0.77% and 0.50% each. In Europe, stocks traded mixed in early trade after the EU granted the UK a 3-month Brexit extension, while corporate earnings remain on traders' radars. Let's talk to my colleague in Frankfurt, Chelsea Dulani, for more from the European space. Hello, Chelsea. A beautiful week to you. Good afternoon.
Thank you. Thanks for having me.
Right. So HSBC dropped its main profit target and says it would undertake a restructuring. What's weighing on Europe's largest lender?
HSBC is really struggling in pretty much every facet of its business, every region. In the U.S., they're really struggling with competition with larger U.S. banks in their retail business. In Europe, they're having problems with profitability like many lenders because of negative interest rates, and also the economic slowdown is not helping. In the UK, where they're actually based, they are struggling with the fallout of Brexit and all of the uncertainty surrounding that. And in Asia, which has been their biggest profit center in Hong Kong, they earn more than half their profits in Hong Kong. They've been impacted by the increasingly violent protests. They're seeing an impact on their customers. Small businesses in particular are having trouble. And they also have a big business in mainland China where the trade conflict with the U.S. is really weighing on growth. So they're really having a lot of issues. They've been talking about this for a while, and they've said they're going to restructure, and they're talking about exiting their French retail bank. They're talking about exiting stock trading and some more developed markets. But I think this report really underscores how urgent the need is for them to do some bigger changes. And I think especially Europe is where they're going to first be focusing on that. We did see a pretty sharp sell-off in the stock today. It's down about 4% already, and it's really weighing on all of the on markets more broadly.
All right, let's look at the Brexit issue, which is also hot on the wires today. How are the European markets reacting to the latest news on Brexit that the EU will delay the UK's withdrawal until January 31?
The market reaction has actually been pretty muted. I think that's due in part to the fact that this was pretty well telegraphed. We've had it's been pretty, there have been a lot of reports over the past couple of days that the EU was going to grant this extension. I think also at this point, investors have been dealing with the Brexit saga for so many months now, and there's definitely a bit of Brexit fatigue in terms of the willingness of investors to trade on this. I think, it is a good sign that for investors that the UK is able to get this extension. Any signs that there would be a hard no-deal Brexit would certainly be bad for markets. But I think this signals that the chances of a no-deal Brexit are getting lower and lower, and we did see that sort of boost stocks, especially last week. But we've seen it a little bit today as well. The FTSE, the main London index, edged up a little bit. The pound was a little bit higher. So we're seeing a small reaction, but at this point, there's still hesitance among investors to make dramatic trades based on this.
Well, it seems a pretty busy week for earnings, economic data, and central banks. Give us a rundown of what's on the agenda.
It is a very busy agenda this week, yes. In addition to the Brexit negotiations, which investors are still following pretty closely, we're seeing a lot of earnings. So here in Germany, we're expecting Volkswagen, Deutsche Bank, which has been in the midst of this big restructuring. So investors are going to be watching that closely for signs of how the turnaround is going. Bayer, which has been hit by trade tensions. So those are going to be important here in Europe. In the U.S., we're also waiting for Alphabet, Apple, Facebook. So a lot of the big tech giants will be reporting this week. The Fed is also meeting on Wednesday, and they're expected to cut interest rates. And sort of to round all of that out at the end of the week, we have the U.S. jobs report, which is expected to show a pretty steep decline in job growth in the U.S. So there's a lot to be watching this week.
Okay, thank you, Chelsea. Well, it's the beginning of the new week, so let's keep our eyes on those earnings coming in this week. Thank you for your time.